Hey everybody, happy Sunday and welcome to episode 9 of the Stock Trading Pit Season 4. Today we have 4 segments as always, with segment 1 being Talking with Traders with Dan and special guest Jim Ropel, who's a hedge fund manager as well as the founder of growthstockmentor.com. Segment 2 is going to be the broad market review, looking at some broad market ETFs as well as some other names as well. Segment 3 is going to be the watch list with myself and our special guest Anne-Marie Baiynd. In segment 4, we're going to end it with some weekend chart requests. So sit back, relax, and let's get into it.
Hey everybody, and welcome to another episode of Talking with Traders, where we get to know the people behind the trades. Today I've got a special guest with me, Jim Ropel. Jim, thanks for being here.
Great to be here. How you doing?
I'm good. It's good to talk to you.
You too.
For those who don't know, Jim's a hedge fund manager. He's the brain behind growthstockmentor.com. He's got a lot of interesting stuff to share with us today, so let's jump right into it. Jim, how'd you get into trading?
In college, I had a really good friend who inherited a lot of Paramount stock. This is when, by the way, Paramount was a go-go rip-roaring growth stock, 35 years ago. And the crash of 87 happened when I was a senior. And so it just captivated me I was trading options back then because I had like nearly no money, literally like a couple $100. And then my roommate in my senior year, his dad was a stockbroker. So it was just all around me. And then out of college, my first interview was for a cold call stock jockey stockbroker back when you'd go through like country club directories and call all the people. And right about that time, I stumbled across a book called A Random Walk Down Wall Street, which I'm a very go against the grain person. And the book tries to spell out that you can't beat the market. And I said, not true. I can do it. And I didn't do it for many years. I lost money maybe 5 years in a row. My wife, after we got married, she's like, please quit. You're losing our money. You should become a lawyer or a surgeon or an insurance or anything but stockbroker, which even pushed me harder. And then I learned how to trade because I read Bill O'Neill's books and I started to go see Bill O'Neill. I probably saw Bill live, every year between 1 and 3 times for 20, 30 years.
Okay.
And I started to make money. And I first started with cutting my losses and then better selection criteria. And after I was a retail stockbroker for maybe 15 years, I was like the 9th largest broker at Morgan Stanley in the year 99, 2000. I left in 2004, started my first hedge fund. 5 or 6 years later, I started my second. And then about in 2016 or 17, I had a boy living with us. He was my caddy. He was recovering from cancer and he was very into crypto. And he kept telling me, you got to get into crypto. Let's start a hedge fund together. And I thought those coins were junk because Bitcoin was around $200 and Ethereum had just come ICO'd. It was like $10. And I'm like, anything below $50 is the junk heap. I have no interest, but it started to rip. And he and I then formed a partnership and we opened up a crypto hedge fund back then. So that's all 3.
No kidding. That's a crazy story. When I'm just curious because not a lot of people have a chance to hear from a real hedge fund manager. What are the strategies that you guys employ, and how do they differ from the strategies that retail traders use?
I think, my strategies almost purely can slim, as Bill describes in his book, but I'm a position trader. I really am corroborating technicals with fundamentals. I want those technicals to corroborate the amazing story I think I know. And I'm a position trader. So I'm trying to build up really big positions. I probably almost never hold more than 7 or 8 stocks. Almost never. That's my max. I'm highly concentrated. I'm going to omit job 1. That's cutting your losses. So we're not even going to talk about that. That's so obvious. You're going to lose all your money if you don't, quite simply. So we're going to skip that.
So?
No, I know so because I've done it 3 times. In the beginning, I told you I lost all my money a lot. Like I was terrible. But once I nailed that down, I always picked some good stocks, but I wasn't technical at all back then. I didn't use charts. I was a purely fundamentalist. But if you look at great hedge fund managers, almost every one of them is a trend follower. Michael Steinhardt was, I think, the only one who was mostly fundamental. But all the biggies, Druckenmiller, Soros, Julian Robertson, all these guys, they're all trend followers. And so I don't like to reinvent things. I think the Japanese had it right. Find somebody who's killed it in any endeavor you wish to choose, and you just knock them off. There's no sense in blazing trails.
I love that. So do you use any indicators when you're doing the technical side of your analysis?
I use several.
Okay.
Overbought, oversold oscillators, put to call ratio. I look for peaks, for exhaustions. Accumulation distribution is huge. The volatility, the VIX, I use the VIX the same way I use the put to call ratio, but most of my indicators are price and volume on indexes and individual stocks. Although as quantitative easing has evolved or become more prominent, volume is less accurate. It does not. Markets, you find indexes will plunge on heavy volume in panic, and then they'll levitate back up on light volume. It's become almost the norm in the last 5-10 years.
I think a lot of that has to do with, everybody looks for high volume, right? It's like this piling in effect, right?
Absolutely.
Agree.
But you don't get, like, it's gravy. If you get a stock that goes up on volume, it's really awesome. And we are in the dog days of summer right now. If you want to talk about current markets, a lot of stocks, first of all, the volume is way down from late last year. It's way down. And so stocks, when they want to come out, they just are not. It's so rare where you get a forceful breakout and then follow through, where they're just lacking follow through all summer long.
I believe volume, at least on the indices like SPY, has been declining for many, many years, right? Like on the long-term charts, you can see. I've always thought that was interesting.
I prefer to look at volume on the index itself, because I think a lot of people use the SPY to hedge. So they're often initiating trade through short sales. Okay. So I don't think the volume, it doesn't correlate perfectly. So I'd rather look at the volume on the index itself, but I do look at it.
Okay. Are there any industries or companies that you're kind of focused on and looking at right now?
Well, the biggies, internet security.
Okay.
Listen, anything with monster earnings growth. Okay. It just like Shopify, Square, Roblox. And I occasionally will look at, listen, I'll just give you a big secret. The magic pixie dust, the secret elixir in the stock market, is crazy high volume with massive earnings growth. If you find a stock that has that, you're almost certainly going to find the major institutions are going to be in there. And Bill O'Neill said over and over again, if you can't make money in the leading liquid names of the day, it's very unlikely you're going to make any money in anything illiquid or less liquid. I am a liquidity junkie. I'm trying to put $10, $15 million in a name, and I want to be less than 5% of the daily volume of any stock I'm in. That really shrinks up that list. But you'll find that the major players are all in the same names.
I've noticed that you can see that in hedge fund holdings filings. Pretty often there's quite a bit of overlap.
Tons. And that's why, listen, if you have two companies, they're both growing at 100% a quarter, and one trades $4 billion worth of daily dollar volume and one trades 100 million, the one with the trades the 4 billion is PE ratio will be double or triple the PE of the lesser liquid one. Because it's hard for people to think like an institution when you're not one, but try to put $15 million in a stock. There's just not that many names you can do it in. So and by the way, the names that have great institutional sponsorship are less volatile, because if somebody wants to get out, Fidelity will go, we'll take 500,000 shares. You try to dump 500,000 shares of some little stock that's got a market cap of $2 billion, that stock's going down. I mean, way down.
Or you're going to be selling in small chunks for a very long time.
Yeah, then you're trapped. I mean, I've been trapped in stocks, and I don't ever want to do that again.
Not fun. When you look at crypto, you mentioned you run a crypto fund. Do you focus primarily on the Bitcoins, the Ethereums, in the same kind of mindset as you look at equities? Or
I do. I mean,
Okay.
I'm primarily, my overweighted position is Ethereum. It's the leading coin right now in the large cap area. I do have a big position in Bitcoin, and my prior partner Matt really got us into some amazing private placements. I mean, the record that we had with private placements might be unparalleled. I think people hit maybe 1 in 20, 1 in 30. We hit 5 of 8 that went up to Mars. And we've also just bought some really amazing ones. I'm under an NDA right now, but we just bought 2 amazing private placements. I think they're going to be, I don't know if they'll be the biggest we've ever had, but they are amazing. So I do both. I'm not a venture capital guy. I don't like illiquidity, but in this space, it's so young. We're just building out the infrastructure, layer 1 and 2. It's kind of like the internet in the very late 80s or early 90s. That's where it is.
Good analogy.
I mean, imagine if you could have purchased 1/100,000th of the whole internet in 1989, you'd be a billionaire. And I think that opportunity exists right now in crypto. There's no doubt crypto is going to be, well, I can't say that. I would venture to say crypto is going to be possibly the largest innovation in my lifetime. I know that sounds grandiose, but just take a look at everything you touch, it's going digital. And crypto is the underpinning of it.
It certainly could be. We've had people on here who are crypto maximalists, right? Who think it's going to replace the dollar. And we've had guests on here who really hate crypto and think that it's going to zero, right? It's a very religious thing, and people tend to feel very strongly about whatever their position is. I tend to agree more with you. Like the technology behind crypto, has a tremendous amount of value, and that will drive the value of assets tied to it. As adoption spreads, but time will tell, right?
Time will tell, and I've been wrong more than I've been right in my life. You don't have to be right. I'm wrong 7 out of 10 trades, but I will tell you, the person who said crypto, every central bank in the world is working on a digital currency, but it's going to be shit. Just like the fiat currency they print, they're just going to print more digital coins. I mean, nobody's going to want them. There's only one Bitcoin. I don't think it's going to take the place of currency. I think it's going to be more of a store of value, but I think the utility of Ethereum and the scalability of the internet computer it's just going to take over. It's going to take time, but it will happen faster than the build out of the internet. I was there. I was at Morgan Stanley in the IPO age of the late 90s. And so I watched the whole internet build out, and the playbook is very, very similar to the build out of blockchain. It's very similar. The opportunity is enormous.
Do you look at crypto as a 10-year hold, or do you get in and out of cryptos occasionally?
I am more fundamental than I am technical with crypto.
Okay.
But I still hold, in my fund, super low cost basis coins. I do trim around excess. If I'm spot on, I do trim maybe 10-20% of my coins, but I'm so afraid that we're going to have like a in stock terms, a blow off top, that I don't want to miss it.
Yeah. I mean, it happened to Bitcoin to a lot of people. I know so many folks and big money people, buying at 65K, right? And then watching, it go down by half. Did you add during that pullback?
I actually bought 2 private placements at unbelievable valuations, good, low. But the problem with the major correction we just had was I hypothesized that Michael Saylor, his series really resonated with a lot of people, not just people with 10 grand or 20 grand, but whales. Because this bear market that we just had in crypto, this 50-60% pullback, was primarily driven by new whales, not old whales. The old whales were pretty much buyers through the whole thing, but the new whales were the guys who got crushed.
Do you look at on-chain analytics, or like how do you inform that?
Shout out to Willie Woo and Bill Clemente. I mean, these guys, I can't do everything. I run 3 hedge funds and doing growth stock mentor. So I follow them. I think they are fantastic.
Okay. That's interesting. So you mentioned growth stock mentor. Maybe tell us a little about that. What is it?
So I mentioned the boy, Matt D'Souza, who was living with us when he was recovering from his second round of cancer. And he was a caddy. I love to play golf. And invariably, I get to know my caddies really well. And they say, hey, would you teach me to trade? So I dedicate, if I give them the books, they read the books, and then they come into my office and I go over it with them. But over the years, it's grown to such a large number of people that, and I also want to try to reach my partners in my hedge funds. So it fulfills, I can't spend 15 hours a week meeting 15 caddies. And I can't spend 20 minutes on the phone with 45 partners. I would never have time to do research or run the funds. So Growth Stock Mentor teaches people how to trade. I answer everybody's questions every Monday. I go over the current trends in the market, the leaders in the market, my positions. I'll answer any question on anything. So it really allows me to, in a certain way, give back to people. I love teaching. I love it. It fires me up. And, Bill taught me.
Thank you. What advice, let's say meet somebody brand new, what advice would you give them when they're like, I want to get into trading?
Don't think that if you have a good, first of all, I made almost all my money in about 7 or 8 stocks over 30 years. So everything in between was a break even or a small little loss. The winners, I'll tell you this, unless the golden goose of capitalism is suffocated by socialism, entrepreneurs are going to continue to innovate. Those guys are going to need money. They're going to come public. It's going to have the sales, the earnings, the return on equity, the perfect chart pattern. It's never going to stop. This is America. And we have the greatest system in the world. So follow the method Bill laid out. If it suits your nature. And when you have a big move, first of all, anybody can do it with time and discipline. But when you have a big move, don't think it was a fluke. It will happen over and over and over again. And it's never going to stop as long as capitalism is the dominant method of our society for us. And so anybody can do it. You can go from first class to private jet doing exactly what I grew up one of the lesser wealthy people. I wasn't on food stamps or anything. My family wasn't, but we were, we didn't have any money. Anybody can do this. I'm dyslexic. I had trouble in high school, grades wise. In college, I did better in college, but if I can do this, anybody can. And they'll never, these names are never going to stop coming.
Yeah, there's always a bull market somewhere. What would you say the biggest mistakes that new traders make? Like, how do they fuck up? Screw up.
Hands down, they overtrade.
Okay.
If you want to get rich, first of all, you're going to make a million mistakes. So you got to get back in the water to catch the wave. You cannot catch the wave from the sidelines. And I think the fear, I have a list of great quotes, and I reread them 2 days ago, and I noticed that most of them are centered around fear and not being fearful. So you've got to get off the beach, get in the water, catch that wave. Don't be in a hurry, because when you get in a hurry, you're going to miss these monsters. And the average leading stock in history has run up for about 98 weeks, approximately. How many people hold a stock for a year and a half? They don't do it. Be patient. Sitting. I give a stock every opportunity to succeed. I will trim a bit when it gets excessively above its moving averages, but you have to chill. A stock cannot triple in 3 weeks. It just doesn't happen. It's so rare that it happens. If you want to get rich, you need to sit through 5, 6, 7 earnings reports. If you get into a stock and you sit for 5 or 6 earnings reports and they're beat and raised quarters, you're going to have a monster. That will level you up. That'll take you to the next level. And if you get 5 or 6 of those in your life, you're going to put all your kids through college. You're going to travel the world. You're going to be wealthy. You'll never worry about money. But it happens that'll take It took me 30 years. The compounding out over 30 years is staggering, the amount of money you can make.
There's a great book on the topic. You ever read 100 Baggers?
I have not, but I'd like to
check
read
it out. Check it out. It's all about the power of compounding long term, right? Although it also talks a lot about sitting through 90% drawdowns. So
okay, that you can't compound if you take big drawdowns. That's just a zero defect policy.
I think it's an interesting book for that perspective, right? Because it seems to conflict in some ways, right?
You asked me what kind of a trader I am. I am an intermediate term trend trader who augments that with fundamentals. My average hold of a big winner is 9 months to a year and a half ish. So, you said rookies, they over trade. And when they get into a downturn or a bad cycle, they don't let back off the accelerator and they shoo themselves up into oblivion, and then they lose their mental edge. They doubt themselves. The next follow through day comes and the market turns up and they're on the beach with their head in the sand like an ostrich, and the market just takes off without them. Over trading is toxic poison. Now,
I would agree.
The only thing worse than that is not cutting your losses.
The two sins.
Yeah.
So Jim, I do have to cut it off here. We are completely out of time.
That's okay.
But I just want to say thank you for coming on. Hopefully you'll come on one day again. And if anyone wants to learn about Jim, we've got some links in the description to his website and his Twitter. Jim, thanks.
Dude, thanks for the opportunity. I totally enjoyed it. Have a kick-ass week.
Thank you.
Alrighty, let's look at the broad markets with brand new monthly candles to go over. So all of the charts that we'll be touching on, except maybe one or two, will be on the monthly side with the daily view as well. So starting with SPY as always, you can see here that we did have a pretty strong month. So if I zoom in, you'll see that we've literally had 1, 2, 3, 4, 5, 6, 7, 8, 9 green months in a row when you look at the raindrop here. And if you zoom out, you'll see here that we did break out of this kind of medium-term trend back in March, and then we've just continued to move up. So there's really two areas to watch. Either the downside previous level of resistance, which would possibly act as support below. That's this dashed line here, and that would be right around, let's say, 405 to 410. We do have a gap even a little lower than that, so just keep that in mind too if this did decide to move down. Remember, all of this is an if-then. If this starts to break down, then we watch this level. If this continues to move up, then we watch that level. So if we continue to move up, this solid line above, this solid red line would be your target. Remember, this is always a function of time. If we went straight up in August, we'd be around 474, 475. But if it took a while, we could move up all the way to 480 to 490. It really just depends how long it takes price to get there. And remember, these diagonal sloping trend lines are always a function of time. So these targets are going to be changing the longer it takes for them to hit. So just keep that in mind. But on the daily side of things, really not too much to talk about this week. Absolutely just a completely dull week. One thing that I did want to touch on is just the fact that we do have this blue raindrop forming. This was on Wednesday. And you can see here that last time we had a blue raindrop form, it's been a while. It was back in early-ish June, and we did have a little bit of a pullback from around 424 all the way down to around 415 a few days later. So just keep that in mind. Sometimes blue raindrops can act as short-term reversal points. So let's just keep that in mind on the shorter term. And then on the longer term, remember our levels would be around 405 to 410 on the monthly if we broke down, then probably 475 to 490 on the upside, depending on how long that takes. And same thing with the lower levels. If it takes a while, we could maybe bottom out around 415 to 420. It just really depends on how long it takes for this to kind of make or break one way or the other. Last thing I'll mention here is July has a 100% win rate over the last 5 years. 5 years, 2016, 17, 18, 19, 20, 21, 6 years, sorry. And you can see it says right here, seasonality for SPY 6 years. So over the last 6 years, we can add another win to July with that 100% win rate still staying intact. Then going into August, we have an 80% win rate. And going into September and October, that's when it continues to decline. So all in all, seasonality is still pretty strong going into August. And same thing with a lot of these other names that we'll be touching on. So the Qs are something to keep in mind with, with a couple things. One, if you look here at the Qs, you can see this pivot here is where I anchored a VWAP, and we moved down and bounced pretty much twice over the last week around this area. And one thing that I'll note here is you can tell there's always a discrepancy when you have a green raindrop versus a red candle. So if you were on the candle side of things on TrendSpider, you would see this actually being a red day. But on the daily raindrop, this is actually a green day with quite a bit of volume at the top of the range. So you can see here, if I zoom in, most of that volume is at the top of the range. So definitely a little bit of a discrepancy. I like to even call this kind of a new type of divergence when you've got a red candle and a green raindrop, or the opposite. So either way, green raindrop with a red candle, I would look more at the green raindrop. And then if you have, a green candle but a red raindrop, that's when I would, look at maybe being a little more cautious to the upside. So all in all, we did bounce where we needed to this week. And you can see here that going into next week, we'd really want to clear these highs around 368, 369 or so. Now on the monthly side of things, we also had a really strong month here. Nice green raindrop. You can see that we just are breaking out over the last 2 months through this range that we were stuck in for literally about 6.5 months. So we are still breaking out. This to me looks like still an early stage breakout, but we'll just have to see what happens into the coming months. Now, same thing with July here. We had a 100% win rate over the last 6 years. And you can see here that we actually added another win to July. August has the same win rate with an 80% win rate, just like SPY. And then September and October do get a little iffy with those 40% win rates, which is actually the second lowest win rate in all of the 12 months of data. So February has a 33% win rate, and then September and October are the next lowest with only a 40% win rate. So definitely worth noting that as the months progress in the next couple months, we are entering a little more of a historically weaker time of the year, and we'll just have to see how that plays out. But we just have to follow price action until then. IWM is the next one that we'll touch on, and this one really has had a little trouble just getting any type of traction. We've been talking about that it's pretty much stuck, and it continues to be stuck. On the daily side of things, you can see that we did break through this swing high anchored VWAP on Thursday and then moved right back down on Friday. So really not too much to talk about there on the daily side of things. But on the weekly side of things, the monthly side of things, if we anchor the volume by price from the COVID low, you'll see here that we do have a decent sized volume shelf forming here. Now, Amazon had a pretty similar type setup, and it actually broke down and then moved up through the volume shelf to hit new highs. So that's kind of typical, where you can actually break down. This actually can become a distribution zone at first, and then as you get a pullback, that's when you can really actually, that second round of the move up can be the time that we actually break this volume shelf, which would act as initial supply, but then act as a nice base for price. But all in all, red raindrop here on the monthly. And then if you turn on the hollow candles here, you'll also see we had a red month. So pretty much right in line, the raindrop and the candle here. So not what I'd call the strongest close here for the month. Now, July has an 83% win rate. We didn't actually get another win in 2021, so we can add a loser to that statistic here. And then going into August, you'll notice here in September and October, 60% win rate. That's higher than what we saw on the Qs, kind of almost right in line with the SPY. So all in all, next couple months are a toss-up with the seasonality. Nothing too extreme there. The next one that I wanted to look at is XBI. We don't really look at XBI too much, so I figured it may be worth a look. Now, on the daily side of things, you can see here, and I'll just turn on the hollow candles to get a little better view of what's going on. Do we potentially have a W bottom forming? Maybe. We're not going to know that until price does its thing, and if we hold this area and continue up, then we could possibly say this could retest these highs around 140. But for now, if you're looking at the monthly raindrop, you can see that we did start to break down through this volume shelf right here, highlighted in orange, and you don't have a lot of volume below. So if I highlight this in, just make this blue, you'll see that we do have a little bit of a volume gap below. The next shelf below is, let's say, right around 115 to around 110. So you do have a little bit of a zone below. But if we do start to trickle down into this blue area, remember, this is kind of a gap in liquidity, and you can have pretty quick moves to the upside or the downside through these pockets of kind of no liquidity. And that's what we're seeing here on XBI. And once again, another red month. July only has a 50% win rate, so keep that in mind. You know, there wasn't really any edge using seasonality, at least for XBI, for the month of July. Now, August, you got a slight uptick to 60%. September and October are both 40%. So all in all, not going into the strongest part of the year, especially for XBI. A lot of the time you can look at XBI or IWM to see is risk on or risk off in the market. And for now, it is looking like there may be a little bit of a risk off type of sentiment, but we'll just have to play that one with the price action. VIX is the next one that I wanted to take a look at. So VIX, you'll see here, we don't have any volume data for the VIX with the raindrop, but we'll just look at the daily chart here. And remember, you can't really look too much at the daily chart on VIX just because it's not something that you can really chart out, but you can get an idea of what the levels are. And remember, those previous COVID levels were much lower, but going into August, you'll see that there's a 100% win rate. So over the last 6 years, or over the last 5 years, going into this would be the sixth year going into the month of August. 100% win rate means that over the last 5 years, the VIX has closed green every single August versus July's close. So it is interesting to see a high VIX win rate and a high SPY and QQQ win rate as well. So maybe we have a lot of volatility, but maybe the markets do okay as well, which has happened in the past. So that is what we have on VIX. Definitely keep in mind the seasonality. It could be a little bit of a wild ride for this one going into the next month. Next one up is GLD. If you guys remember from last week, we were talking about this bull flag on GLD. So I really just wanted to touch on that. So we got a nice breakout on Wednesday through that bull flag resistance. Got a big old gap up the next day. Almost filled that gap. We did fill that gap perfectly on Friday. And now we'll just have to see where it goes from here. Now, on the monthly side of things, if I turn off the volume by price, you'll see we're getting pretty close to the apex of this symmetrical triangle here. And, not a bad monthly raindrop with a lot of this volume at the top of the range. So all in all, not too bad of a look here on the monthly chart for GLD. Going into August, you definitely have quite a drop in seasonality for August and September with a 40% and a 20% win rate. But July has an 83% win rate. We had a nice close for GLD on the month. If we look at the hollow candles, you'll see here that we did have a green month on the candle and a green month on the raindrop. So you kind of have those two agreeing at that point. And that may spark a little bit of bullishness going into August, even though the seasonality does drop off quite a bit. Next one is SLV. SLV, this thing has just been so dead. There was a nice little bounce on Thursday. You did have a pretty strong gap up. And so if we look at the gaps using the gap snake on TrendSpider, you still have the gap above that would fill right around 25.26 or $25.26. So $25.25 or so. But we also have a gap below. So keep that in mind. Remember, GLD's gap did close on Friday. This has not closed yet. So that would be your downside level around, let's say, a gap fill of around $23.20 or so. Now, on the monthly side of things, we pretty much just moved right back down to the volume shelf below. You can see that I'm anchoring the volume by price from the COVID lows. You can see that we're pretty much hanging out right at this volume by price. Now, if we do break down through the volume by price, your anchored VWAP from the COVID low is right around 21 or 21.75 to around $22. And so keep that in mind, the anchored VWAP, if this volume shelf does break down over the next few weeks or even a couple months. Now, looking at the seasonality, not a ton of edge. You've got 67% for July. That didn't play out. You've got a 60% win rate for August. These, you really want to look for the really extreme values, 60%, 50%, 40% even sometimes, just like, it's not giving me a ton. You want to see like, oh, this has a 0% win rate, or it has a 100% win rate. Not because it's guaranteed to go up or down that month because it's happened in the past, but just because that is a pretty extreme win rate and something to keep in mind if the technicals are aligned with strong seasonality. So gold and silver are done. Let's move on to Bitcoin, a little crypto. Bitcoin has had quite a run, I have to admit. It's been pretty fascinating to see. Now, we do have a couple views here. One, we did break through this descending triangle, so it looked like we were going to break down. Nope, reversed. We never broke through this low here around 28.8 or so 28,800. We broke to the upside. We moved straight up to this swing high anchored VWAP. Now you can see that after breaking through, we pulled back and tested it almost perfectly right around 38K. Now, if we anchor VWAP from the all-time high, you'll see here that we are getting very close, almost tested it perfectly here, right around 41,700. And we'll just have to see if this breaks. This is the anchored VWAP you really want to break through, this all-time high anchored VWAP. So until we do that, still looking pretty strong, but for now you are still below that all-time high anchored VWAP. Right, pretty much trading right in between the swing high, this next lower high here, and this all-time high anchored VWAP. Just trading literally right in between them. On the monthly side of things, you can see kind of a weird raindrop, kind of honestly an awkward looking raindrop. Not a ton to mention there, just that it's green. And we obviously we do these videos a little bit ahead of time. So right now this is Friday that we're doing the recording, but we're pretty much done for the month. But keep in mind that when you do watch this on Sunday, there may be some slight differences with what this monthly raindrop does look like. Now, interestingly enough, Bitcoin has the weakest month of the year over the last 5 years going into August. Now, keep in mind that just because there's a weak seasonality does not mean that it's going to go down. You've got a pretty strong move to the upside on Bitcoin and a lot of crypto right now. So the technical and price action side of it is there for probably more of a bull case, but the seasonality is more of a bear case. So let's see which one plays out. We'll go from there. You'll see that going into September, you've got a really historically high win rate with an 80% win rate over the last 5 years. So that is Bitcoin. The last one we'll do here for the broad markets is Ethereum. Ethereum is one that we were talking about, these lows that were really just being tested over and over again. And I mentioned a lot of the time these can break down. Not so much the case this time. So the all-time high anchored VWAP has still not been tested. It was tested multiple times over the last couple months and it was rejected. So keep that in mind. We would really need to close and move above this all-time high anchored VWAP to really kind of get excited, because until then we're just having a bounce like we've had in the past couple months. Now on the monthly side of things, you can see this will be the third red month, at least on the monthly candle, or excuse me, the monthly raindrop. If you turn on the monthly candle, you'll see here that this is actually green. So you do have a little bit of a discrepancy, at least for now. As I mentioned, this can change because there's still some time in the monthly candle because this does trade on the weekends. You do have a green monthly candle and a red monthly raindrop. So a discrepancy to keep in mind, but not something that should, just completely make or break the trade if you're trading this. Now, the main thing that I'll point out is the fact that we do not have, at least for now, a ton of volume supporting the price up here. You've got a little bit of a volume shelf, but you can't see it that much because this big volume node around 200 and then around 400 is kind of making that look smaller. But all in all, you do have quite a bit of volume here. Now, if we turn off log scale here, you'll see that, you've got a lot of volume distributed over this whole price range. You don't have a big shelf unless you look down below 500. So there are a lot of people holding at quite a bit of profit from the sub 500 area. So that is all for the broad markets. We went over some broad market ETFs, we went over some metals, we went over some crypto. So hopefully this gives you a better view of how things look into the month of August. And let's move on to the next segment. Alrighty, let's jump into this watch list segment with our special guest, Anne-Marie Baiynd, who is a avid user of the platform and a veteran being on the show and some other virtual events that we've done in the past. So Anne-Marie, thank you so much for joining us today. Really great to have you on. And what are we looking at into the next couple weeks or even months?
It's my pleasure to be here again, Jake. And I love working with TrendSpider, as you know. And as far as what we're looking at over the next few months, it's a little bit of a mixed bag. And really, if you watch television, depending on whether we've got a 500-day down or a 500-day up, the story's totally different, even it's one day from the next. So it's a very messy patch. But what we do see are that leaders stay leading. And that's really where we've got to stick if we're looking for safety. A lot of times, you know, if we're starting to think about what can I play for the next few weeks, a lot of times we're sort of used to outsized gains in certain places. And as we move higher and more into this market that continually moves forward, we start having to think, wait a second, maybe my chart needs to retrace just a little bit. So what I want to do is run through a couple of the big leaders in the S&P 100, 3 or 4 of them, to let you see that it's okay to wait for price to come into you because so many of the candlesticks have been repeating themselves. So I'll take a look at Visa first. I love this where the analysts have the buy and hold. I love this feature. It is so fantastic. And it really is a good one. If you take a look, however, at the price action, I love using the simple moving average. That's a 5 on the weekly. And if you're saying to yourself, wow, I don't want to buy the high, but I see every single one of these candlesticks essentially retracing themselves, we might look at this chart and go, wow, it's just moving up. But if you actually look at the play, this candle is retraced by this candle and retraced by this candle, and the majority of this candle is retraced, half of that candle, all of this candle, and then here we are in the new week where again we're coming into the candle replacements, so retracements. So what I like to do is say, listen, I've got solid uptrend, I'm looking at this, if I want to buy, I'm going to let it come back into the candle body, and I'd like for it to actually test inside of that 5 simple moving average. And so what I love to use is the line, right, where we would, position it. And again, Sally, there we go. And if I want to put an alert on that line, I really want to have something where it closes within a certain sensitivity, which again, this is fantastic. So we want it with about maybe $1.50. So it gives us this little fat edge. And then, you know, whatever you want to call it, let's just call it the Visa alert. And then let's let it trigger twice, right? And once we do that, yeah, we want it to fire off during, why is it not letting me do that?
Help me just there. The trigger at the top there, either a touch or just a breakthrough.
Okay. All right, fantastic. There we go. And that's going to give us this range that allows us to come in and then see, all right, this is where we can position ourselves to buy. Now, what I like to do when it comes into this area is sell a put spread that's out of the money, perhaps into the weekly VWAP or some sort of anchor that looks like old resistance and new support. It keeps us really safe. If price goes down a little bit, we're safe. If price goes up a little bit, we're safe. If price does nothing, we're safe. And so the put spread is a fantastic thing to look at there. The next one we want to look at, of course, is Mr. Softy, which seems to be, you know, running off the rails always. But again, you can see, particularly of late, it's really moved down into these edges and then has bounced off the top. And so we're looking at the same kind of motion that says, hey, let me have a look at it somewhere around this range where we've got these wicks. And then again, we set an alert. We want it to have a sensitivity that's maybe about $1.50 to $1.80, gives us a little bit of room. And we call it our Microsoft alert. And let's let it trigger twice, because a lot of times it triggers once and we don't get a real feel for what's going on with the price. Triggering it twice is going to give you that sense of, wait a second, I see how they are fighting through this space. Because remember, and this is very, very important, when you look at a weekly chart and you're looking for a price action to hold, it's not that it comes in and tests immediately and runs off the edge. They're going to come in and they're going to people that are going to be early to it, and they're going to say, hey, I want to jump in right here, right now. And they'll trade it into the first edge of resistance, and then price action will reverse again. And so what we have to do as traders is really sort of think through that and say, let me make sure that the people that are coming in early are trying to hold that level properly. And when they hold it, then I'll get in and I'll move forward. A lot of times we think, hey, I have to get in now, but fast sometimes means being slow, meaning you go too fast and then you get a drawdown and you get stopped out. And so you have a slow build in your portfolio. But as they say in the military, slow is smooth and smooth is fast. And so when you are looking through something and getting it set up, you go smoothly from one area to the next. And when that becomes rote, or it becomes something that you know every time, oh, wait a second, I got to make sure these guys are holding this edge. They're not going to come up, bounce a little bit, and then collapse underneath it. And if they do collapse underneath it and then recover, you know there's somebody else that's going to try to push it down because it collapsed in the first place. So it's sort of that 1, 2, 3. And if you go slowly, you'll see that pattern look like 1, 2, 3. Then you'll be able to take your trigger, and that ends up turning slow into fast. So you're slow on the approach of looking at things. It becomes a smooth rotation, and you get into your trigger event, and it moves you up to the next level, and you're not constantly going backwards in your portfolio increases through the space. So there are a number of different ones from a weekly perspective that have come back into big support zones. This one we looked at a while back in terms of Boeing, and this edge I had was a big box that it was trying to break through. The reason I have it up here is because for the first time in a while, it's come into the edge of the box and it's holding this zone. So what it actually has to do is close over this region. This is exactly what I was talking about. They come in, you think it's going to hold, but you take it and then it falls right through and it breaks your stop. And you get out and it turns right around and it moves up. Remember, when it comes in, it's going to bounce. And if it bounces and closes above the range like it does here, it's going to go into your next resistance area. And that's exactly what it did. And it fell over. Now it's got to bounce. Let's say it doesn't go into its resistance area, but when it comes back, it doesn't break the ledge. That's when you know you've got yourself a good formation that's going to give you some more upside motion. This one is finally getting itself out of the pickle that it's been in for a really long time. And it's because they've just had a little bit of good news come their way. They have more government contracts than we could shake a stick at, and they are going to survive. They've just had a really rough go of it. So this edge, really watch Boeing. They're going to start giving us some proper gains once the market gets out of its noise. Now, from a quick perspective, we want to take a look at what we might see that's going to pull back in short term that is going to give us some upside measure from a longer term perspective. Here we are. This is Hecla Mining. Jake and I were talking about the mining space, and Hecla is known for gold mining, but they also do lithium, silver, manganese, copper, uranium, cobalt, all of those events. And what they're going to start to do is essentially pick up as the market comes into play. It moves a little bit like gold because that's what they're known for, but they've been advancing their mining exposure. So here's what's happened. Resistance bounces into a brand new high, and now it's closing at an area that still potentially could be resistance. So if we're looking for an area that might be picking a bottom, we would look at this juncture somewhere around 6. And again, we'd need to give it a little more sensitivity than that. And just call it Hecla. Trigger twice. We create that alert. If it holds through that zone and it comes into this area, you can look to the left and see how many buyers let it fall through that trap. But as it came into the zone, they started picking it up. If we can hold above this zone and then get ourselves into the area above 7, we are going to be in great shape for some longer term formations to follow this weekly average that clearly they're going to want to recover through. So that's what I'm looking at from that space. I like Hecla. It's just an area where it still has to prove itself. Full disclosure, I have been long this one, but I've been long since way back down here. And it's been very, very good to us. So I do hold this one. Something else that I also do hold that I'm going to talk about is Valet. And Valet is sitting right at a resistance area that looks like a breakout. And so look at how very interesting this chart is. It's very rhythmic. It moves sideways and then breaks to the north. Still holds this 5 simple moving average, sideways, breaks to the north. Here is the sideways patch. We're estimating that it's going to do the same thing. But if you want to get it before it breaks, the thought process might be, well, why not wait for it to come in where all the buyers were in the first place and get it at around that region itself. So we want it, we want it daily. We want it triggered twice. And we'll call it Valet. So as far as ideas about looking through the charts, really, if you want to stay safe over the next few weeks/months as summer gets very jittery, look for the biggest performers. Do not look for laggers. Do not look for things that continually test their support zones. Look for things that break higher and pull back only a little bit on their very, very bad days. And on those charts, you take small positions and you trade them from support to resistance. We are going to have a very messy 6 to 8 weeks, and maybe even a little bit more into the end of September. And the best thing is to play defense and have as much dry powder as you possibly can have. If you take a look at something like the IWM, that'd be the last thing. The IWM is the ETF that models the Russell 2000, and you can see it breaking down here and trying to hold support. When small caps start breaking their ledges like this, it gets very dangerous because it means that the market is bifurcated, that some things are carrying up all of the market and everything else is just being a laggard. So not a time to be a hero. Just pick the things that look the best and dance with the ones that are carrying the heavy load. And when the balance changes, you can go start digging around for diamonds in the rough.
I love it. I love it. Yeah, IWM is an interesting one, and it's kind of has that similar look as I think it was HL that you went over, where you've got that, those consolidation periods, next legs up, kind of like a stair step action. So
exactly.
Be interesting to see. The small caps did react pretty well to the news with the Fed today. So could be an interesting one if it does hold.
Yeah, and if it does hold, it's going to be very interesting simply because the thought process is that there's so much weight in about 8 instruments in the entire market, just lifting it, that these, again, look at how much they're retracing each other. The retracement events tell me I'm caught in a sideways slog. And so buying the bottom, great. And I know some people did it. It's just, do you take profit when it jams up into the heavy congestion, or do you let it ride to see if it can break? And my thought is, pick the money up off the floor where you see it. And that is a pretty good space right now.
I love it. I love it. Well, as always, we really appreciate you going over some of these names that you're looking at and kind of the logic behind looking at some of these leaders as the market does enter historically a little bit of a turbulent time. And so we'll have to see if these leaders continue to lead, or we do have some slight pullbacks for the next leg up. And Anne-Marie, thank you so much for coming on and discussing. And we really appreciate you being a guest and looking forward to the next time.
My pleasure. Thanks so much, Jake.
Hey, you're very welcome. Let's move on to the next segment. Alrighty, let's finish off the episode with a few chart requests going into next week. Remember, we always do a post on Friday just asking people, hey, what do you want to see? So if you do want to see a particular name or a particular ticker, make sure to follow us heavily kind of in the morning on Friday to look for that post, and mention whatever ticker you want. We generally are just looking at the most commonly requested tickers, and that's how we come up with this list of 5 stocks. Today we're looking at Twitter, Wish, SoFi, Baba, and Tesla. Tesla is just always requested, it seems like, so we're just going to keep looking at it. Twitter, we've got the daily and the monthly pulled up here. On a couple of these names, we are going to dive into the weekly because we just don't have a lot of data on some of these monthly candles because there hasn't been a lot of months yet for, Wish and SoFi. So Twitter, at least, we do have enough data on the monthly candle. You can see here that we are breaking out here. We do have a blue monthly raindrop. So keep that in mind, that simply just means the volume weighted average price during the first and the second half of the month are equal. So that's where you get the blue or the purple color, whatever color that is to you. So breakout here on the monthly. On top of that, we are going into the strongest month of the year by far for Twitter with a 100% win rate. So last year, I think I saw this going into August, and it was just a huge month for Twitter. So we've got the technical setup. We're breaking out on the monthly. We've got the seasonality. We've got the volume shelf. So this one definitely should be at least on your watch list to see what happens from there. And then you go ahead and make the trade your own if it fits your criteria. But all in all, nice volume shelf on the daily from this low here on May 11th. You can see a lot of that volume is holding right around this area, creating a base for price. And all in all, it should be an interesting next month here for Twitter with that monthly breakout. Moving on to Wish. Wish is one that had a decent week. It had some pretty big moves. I actually traded this one, just traded some calls, not a huge position or anything, but it was a fun trade. Got a decent little percent out on this impulse move. And that was it. I'm not in it anymore. Maybe we'll look at it more into the coming weeks, but for now, it's just kind of hanging out after breaking out through this falling wedge. You can see that we had a very similar breakout. We didn't have the same type of move that we had back in June, but we did have at least a 3-day pretty strong move to the upside, almost tagged $11 above. And then we did not hit that anchored VWAP above. And that would be right around the 1150 to 1175 area. Remember, if the price is trading below an anchored VWAP, the anchored VWAP is going to really continue to move down until the price and the anchored VWAP kind of meet. So until the price continues to move up, I think this anchored VWAP, just based on the math, you're going to continue to see this slowly move down. So the longer it takes, the lower that the anchored VWAP is, kind of similar to those diagonal trend lines we talk about and those price areas above or below moving as time passes. So let's move to the weekly chart here. You'll see on the weekly chart, we do have this kind of falling wedge breakout, very similar to what we saw on the daily, but it's just, you can see it here a little better on the weekly. Second half of the week had quite a bit of volume at the top of the range. And, all in all, looking relatively strong. We'll just have to see if there's any follow through. I think earnings are coming up. So as always, earnings can really mess up a chart. But for now, you do have that breakout going into the week ahead. Seasonality, you don't have much because this hasn't been around too long, at least on the monthly chart here. So, keep that in mind that we just don't have a lot to look at here, at least on the raindrop. Now, if you turn on the hollow candle, I think there is a little more data. No, I don't know what I'm talking about. Sorry, scratch that. There's just not enough data here to really go over seasonality at all. So all in all, we've got the weekly breakout. Keep in mind this anchored VWAP above, and those were really the levels. Now, if this breaks down, these previous lows are always going to be your natural area to watch. So that'd be around 880 to 885 below. So that is Wish going into SoFi, another very requested name. SoFi is an interesting one. We've really bounced at this orange shaded area multiple times. So anytime we've kind of neared this box, generally you have a decent move. So back in April, we had around 1475 all the way up to around 1785. We pulled back right down to this area. We bottomed out around 1420, moved all the way up to around 25. Huge pullback, retraced almost the entire move. And we did have a little bit of a spike a week and a half, 2 weeks ago, from around 1490 all the way up to around 1665 or so. Pulled back, retested it, bounced again. So this thing just keeps testing it, bouncing. But all in all, on the weekly side of things, there is a little bit of an interesting story with the weekly candle. You've got a red candle, but then you've got your green raindrop. So as we've talked about multiple times on this show and previous shows, this is a new type of divergence that you really should kind of at least be familiar with, where you do have the red candle, but you have the green raindrop. For me, anytime there's a green raindrop but a red candle, I'm definitely giving more weight to the raindrop color than the candle color, because this is the true volume and the true supply and demand showing us what's going on here, rather than just looking at what's the open versus the close, which can be pretty arbitrary. So all in all, nice spike this week, but still just is really having trouble holding its gains. It did fill this very small gap from the July 29th gap up, and for now may even come back and test the orange area, but definitely keep in mind that green weekly raindrop. Next one is BABA. We'll go back to the monthly chart here, and you'll see some pretty classic case study here with the anchored volume by price. Anchoring the volume by price here from this 2015 low. You'll see here that we've got a nice volume shelf here. We bounced right at the top of the volume shelf in the month of July. We'll have to see if this holds or we continue to move down. This is where you always want to anchor a VWAP, especially if we do break down closer to the bottom of the volume shelf. That anchored VWAP is right in line with that lower volume shelf, and you can see this has acted as a really nice level of interest in a bounce zone back in 2018 when we did pull back right to this 2015 low anchored VWAP. So all in all, definitely keep in mind 168 to 170 if this does continue to move down. On the seasonality side of things, over the last 5 years, going into August, we have an 80% win rate. But remember that it doesn't always mean everything. We had an 83% win rate for July, and we closed very red. So you always have to keep in mind you got to look at the seasonality and all the other variables as well. Now on the daily chart, interestingly enough, we do have a red candle from Friday, but we have a green raindrop with actually quite a bit of volume at the top of the range here. So you can see here that, I'd call this a balloon raindrop, but it's not a balloon breakout. A balloon breakout is when you have this type of candle, that volume at the top of the range above a resistance line. So in this case, it definitely doesn't hold as much weight as it would if we broke out through resistance or a moving average or something like that. Sorry, I just bit my tongue there. Now going into, as I mentioned, the longer term again, this volume shelf does not mean that this is where price is going to bounce. It just means that this is where a lot of shares are holding. If all this weird China regulation stuff and just the sour sentiment that's going on right now continues, this volume shelf can break down. These shares at break even, they can start selling at a loss. They just because they're break even doesn't mean they can't sell. It's just most of the time these areas will act as a nice cushion, as most people aren't just going to sell. But if the sentiment is bad on the fundamental side and just the macro environment, sometimes technicals have to be kind of mixed with that other sentiment that may not be as strong as a nice volume shelf below. So that is BABA. Tesla is the next one. This is one that just naturally everyone loves to see what's going on here. So we will look at it. Volume by price anchored from the swing high here. And as I mentioned, the reason why I like to do that is as we're really starting to hit new highs, if we anchor from the swing low, we don't have any volume data above these previous highs around 700 because there hasn't been any price action since the bottom to really look at. So this is where I like to move it over to the swing high to see, okay, well, we don't have a lot of volume above. We do have a next little shelf here right around 730, 735. So that would be an area maybe above. But remember, as time goes by, these shelves and these volume gaps can fill. We saw that actually this week with PLTR or last week, where you had a volume gap, but then as the price was moving into the volume gap, volume was coming in and actually creating another kind of shelf resistance area. So that's something to keep in mind, that these volume by price zones do change as price evolves. One thing I'll mention, we did get through the break-even supply finally. We did hit almost 697. We almost hit 700, barely missed it. Then pulled back decently into the end of the day on Friday. So all in all, this break-even supply is likely going to act as almost a break-even kind of demand volume shelf here now, because remember, as the price moves back to this volume shelf, those shares that just held for a little bit of a profit when we moved up almost to 700 are back to break even. That creates a base for price, and that could be a base for the next leg up. Now, on the monthly side of things, kind of interesting here that we do have a pretty pronounced pennant here. So we've got a really big bull move. We've got the pennant forming, but keep in mind that we have a red raindrop with a green candle close. So the month of July did close green. If we turn on the hollow candles here, you'll see that this was a green month, but not so much on the raindrop side. So that's kind of almost negative divergence, where you've got a red raindrop, but a positive close for the open versus close on the monthly chart using the candle. July, 67% win rate. So we added another win there for the sixth year, looking back since 2016. Going into August, a 60% win rate, kind of like, it's almost like 50-50, at least for the seasonality. Now, going into September, that's when things get interesting. September is the weakest month of the year, looking back over the last 5 years since 2016. So just keep that in mind, that August are kind of like, but going into September, definitely historically a weak time of the year. So that is all we have for the chart request. Remember, if you do enjoy these episodes, like and subscribe. You'll get a notification anytime these shows go live on Sunday. And if you have any questions, always remember to reach out to our customer success team or just give us a shout on the TrendSpider DMs. Everybody have a great trading week coming up. Thanks for watching and have a good night.